currency markets to any extent at all. You don't need a lot of reminders about it. Remember, a year or two ago, we had the highs there where the dollar was looking strong, moving up. We had the big run up off the highs here. When we had a setback, we all know in the fall of 2008 and then March of 2009, big setback in all kinds of economic factors and bringing the dollar down, threatening those previous lows, but it did stay higher than that. But since then, very strong move up in the dollar. And now the question is that up move over? Because we have now approached the point, in the vicinity of the previous highs. Is that going to be too much resistance to overcome, or is the market going to be able to break through there? And that's the part of the market that we're going to be looking at. What the traders are saying, what are they predicting, or what are they suggesting about this particular time and place for the U.S. dollar? And we're also going to look at a little bit the kind of like the counter to the U.S. dollar, and that is the euro. While the U.S. dollar had, those highs and so forth, you can kind of look right down here and see, well, the opposite thing was going on in the euro. It was making some lows. Then when the dollar was sinking, it was rallying, which is no surprise. I mean, that's just kind of the way it works. And now the euro has gotten to the point down here, and people are wondering, well, is the euro now, because of all the problems that have European economies have experienced, is going to sink to parity with the dollar? There's some good arguments, good cases that can be made either way. Or, have we hit this bottom, and is the dollar now ready to move back up and resume that, uptrend, the thrust up that it had previously when everybody kind of had given up on the dollar? Now it's kind of the way around. Of course, the dollar seems to be strong, but we show you a big picture. We want to be looking at that big picture to view what's the predominant trend right now in the market. What's the primary trend? Of course, in the dollar, it has been up. Euro, it has been down, and we need to keep the primary trend in mind as we are getting ready to place trades and determine what those indicators are going to tell us as to the way the signal will be. Now, these charts will give you an overall view of the direction, but they don't really tell you exactly where you are going to be able to get in or get out of the market. So you do need to have a little bit more help than that to find some kind of a precise point at which to act. You can read the news, you can talk about the developments, there are different things that are going to come up day to day, but what does that overall action for the U.S. dollar? And all of those things, of course, are hard to forecast. Nobody can say for certain exactly what's going to happen and be correct. I mean, I can say exactly what I think is going to happen, but whether I'm correct or not, that's a different story. So there's not a lot that we can do about all of these actions and these prices as individual traders. But we do have our charts, and we do have software to analyze prices to find points that we can trade and tools that we can use to discover those points, and then a way to assess the probabilities of what will happen with at least some degree of reliability. One of the tools that I have found useful for offering some clues for market forecast is Vantage Point Intermarket Analysis software. I need to make clear that I am not a Vantage Point salesman. I do not sell any product. I don't receive money for any product or that is sold. I am just more interested in finding some thing that can help me. What can help me trade, help me develop trading strategies? Vantage Point is a tool that I have found useful for doing that. A couple of points about the Vantage Point software. First of all, the Vantage Point data is based on neural network process determines the 25 markets that have the most, then reflects the degree of that influence to produce a set of intermarket data. And of course, if you look at the U.S. dollar index and what influences it, you'll find a lot of things in there that relate to other currencies and interest rates. That would, as you would expect, be the biggest impact on the U.S. dollar, but there are some other types of little influences that the computers have been able to detect and work that way into the data that is used for the U.S. dollar charts. Another point about the Vantage Point data that you should know, and that is that the predictive indicators that are shown use typical prices. The typical price is the average of the high, the low, and the close. When you look at most analytical software, you are looking at only the close or one point per day or per period to determine the indicator and where it is headed. But Vantage Point uses all of the action during the trading day to come up with a typical price. So some of the things that we talk about when we're talking about price changes and what will happen with short-term forecasts involve typical prices and not, just that one price per day or close. We're going to look at the U.S. dollar in some more detail. Excuse me. We are going to look at the the long-term chart, which we have here, and you can see that we have a lot of data here. We need to click this back down. I am showing the U.S. dollar index because it is, in the past has kind of had that reputation. Well, it's not had enough volume. It's not a liquid enough market. But today, it has become a very liquid market. The USDX futures are traded at the Intercontinental Exchange, or ICE, and has become quite liquid, with thousands of contracts traded per day. The initial margin on the contract, the last time I looked, was 1,729. So that's not too bad, compared to some of the other that's kind of index analysis. But when you can see where we have 3 years of data here, we have a lot of data here. We're going to cut that back down, show you a year of data. And the only point to show you here on the year of data is that we have some of the trending features here that you can see that predominant uptrend that has been in effect, for quite some time, going way back to last November and moving up pretty consistently all the way up almost to those previous highs that we talked about. But now we're also going to cut back down because, we kind of know the big picture. We know the primary trend, and we know that if we are trading, in most cases, we are going to like to be trading in the direction of that primary trend. So since we know that, we're going to cut back to our more current time, just make it a 3-month chart, and to start bringing in some of the indicators that we're going to be using to determine where to get in and where to get out of this particular, if we want to trade this particular market. First indicator that we're going to bring is moving average. I know you're familiar probably with moving average studies and crossovers of moving averages and that type of thing, but this is a way to get a good feel of the market, just in one indicator if you're looking at it, and you're going to stay in tune with the direction of the predicted medium-term moving average. The predicted moving